Hey, thank you again.
Sure. Yeah, no worries.
With all of all the bouncing around and the time changes and all that kind of stuff. I mean, what a hot mess. But thank you. And that is a Callahan shirt you're wearing. Please tell me that's Tommy Boy reference.
That is, yeah. Good. You know your 90s movies.
Man, I got to tell you, you got a Tommy Boy shirt on, and I have it on good authority that your middle name is Matthew,
Yep.
which
Yep.
is obviously my first name. So I think we're best friends, and we just are finding out right now.
Checking all the boxes.
We're checking all the boxes. That's awesome, man. I appreciate you coming to remind me where you are. I know central US-ish
Yeah, Milwaukee
in
area.
Wisconsin. Okay, great, man. Yeah, very cool. We got some Wisconsin folks out here, and I believe we got a Wisconsinner on the call up there too, Mr. Gruber.
That's right. About in 30 minutes west of Madison for me.
Yeah, buddy.
Ah, okay. Gotcha. What town is that?
By Spring Green,
Yeah, okay. I've been there.
people remember Frank Lloyd Wright was big in the area.
Yes, that's we my wife and I visited one of the homes out there. Yeah.
So cool, man.
Yeah.
So cool. Well, hey, thank you for jumping in. We got some amazing men here from all over the world. I even see an Australian in the mix, and he's got a great accent. So I hope he has a question and comes in with one later, just so you get to, even if it's a ridiculous question, just so we get to hear him talk. But
That's great.
yeah, this is an hour all about you, man. I'm excited to dive into you and the work you're doing. And I've been diving in a little bit, so I got some questions here. These guys will come in on the backside, but we're just gonna rock
Sure.
and roll on what can, I mean, goodness gracious, started out as a heavy-ish day. It's September 11th, right? We had everything with
No
Charlie
kidding.
yesterday.
Yeah.
I mean, goodness gracious. And Charlie's a past guest on this show, and I mean,
Wow.
it starts out very, that's a very dark thing, but we're going to bring some light here and just have a good conversation
Sure.
on
Sure.
everything. And
Well,
so,
thanks for the invite, Matt. I
yeah, no.
appreciate it.
Honor's mine. So we're gonna kick off. I don't like the who is Sean before we jump in. I don't like those questions. So I'm gonna start out with this. Before Tiker was a software, it was a spreadsheet.
That's
So,
correct.
right? So that is something that I have heard you say specifically. And so I think we're gonna use that to frame the
Sure.
beginning of this conversation. Your story starts with something so many men can relate to. I'm going to build a tool for myself. I'm going
Yeah.
to build something for myself just to make a smarter move. And so, what is that original problem you were starting to solve? Because I think that'll
Yeah.
take us to what you're building now.
Yeah, you bet. I'll try to keep this to like 2 or 3 minutes, but it's got some entertainment within. So I built my first company between 2006 and 2010. It was just an agency building software and websites for small and mid-sized businesses. And we went through a merger in 2010. And now, in that case, it wasn't like $1 million check was written. I get a write off into the sunset. It was none of that. It was, all right, all debts and liabilities wiped clean. And at that point, I was like, all right, how do I transition from working for money to getting money working for me? And I turned to the stock market. Unfortunately, I didn't have any guidance or a good place to start. So I was kind of doing it blind as most people do. And I did that for about 4 or 5 years, maybe keeping up with the S&P 500. And at the same time, and I think everybody here can agree, that Warren Buffett and the late Charlie Munger were able to consistently beat the market. And we know that they're not gambling men. They're not using feelings or emotions to pick stocks, which means they're using some sort of mathematics as their start. And my background is about 20 years in tech with a strong emphasis on math. And I'm like, all right, I gotta figure out the math they're starting
Mhm.
with. So I literally went down the YouTube rabbit hole, read as many books as I could. I found a guy by the name of Phil Town who actually revealed some of the calculus in his books. I'll give you one of the books now. It's Rule One. And I took some of the math, put it into Excel, and then I'm like, hey, I got to come up with a system that makes it easy for me to make a decision. And I was thinking, okay, what's the easiest to read rating system around the world? I'm like, you know what? The traffic light does a pretty good job. Doesn't matter what country you're located in or what language you speak. Everybody kind of gets the whole green, yellow, red methodology, right? So I decided to do that. Stocks in this Excel sheet were the either on sale, watch, overpriced, green, gray, or red. And yeah, I used that the next 4 or 5 years, making returns between 15 and 50% consistently 2019, I started sharing it with a few other people who are retail investors, just, regular guys like us that invest in the
Yeah.
market. And everybody's like, you need to turn this into a software as a service for others
Yeah.
to use. And I've been looking, I had a few failures up until that point, a few other businesses, and I'm like, I think I've got something here. Yeah, and I'm like, okay, green light, let's go. Took a year to build the first version. It wasn't very pretty when it went live, but fast forward to today, we just crossed 13,000 customers in about 50 countries. So,
Good
so
for
yeah,
you, man.
yeah, that's the backstory.
How cool. Okay, so there's a couple things that you said there that I want to dive into. So you mentioned 15 to 50 is what I wrote down, if I heard that correctly.
Yeah,
You're talking
correct.
about from percentage wise in returns. So those early years, you got your spreadsheet tool,
Hmm.
um, getting those kind of returns. What are the factors? Was it all mathematical, or was it mathematical plus a mindset shift? And that's not a loaded question by any sense. That's a true, honest question. Is it
I know where you're
all
going.
right? Was
Yep.
it all just like I just take the emotion out of it, and this really is a pure formulaic expression, or is it because what when people hear that, it's like, oh, cool, sweet, done. But there's got to be something they've got to think about, either risks or a mindset shift when they start to
Yeah.
hear numbers like that, right? Well, how do you
Yeah.
look at that for yourself?
Yeah. So, and those numbers are real. And to be honest with you, our customers typically fall between 15 and 25% per year, and the majority are complete beginners. As I had a friend say that has worked at Goldman Sachs, he's like, Sean, what you have is impressive, but you're not making enough noise because you're still a relatively small town. I mean, 12,000 people is decent, but like, he's like, you got to get to the size of like Madison, which is like a few hundred
Yeah,
thousand people. Then
right.
you're going to make some noise. People are going to start like, whoa, okay. So yeah, the methodology we use is all investing, no trading. So it's value investing. It's all about finding strong businesses, safe businesses. We don't take high risks. If people want to make $1 million overnight, we tell them like we're not for you. It's
Right.
it's all about finding financially strong businesses. And our system, it really does cut all the decision making or as much as possible out of the equation so you can log in, you can see the math behind. In fact, our calculations are open source, even though we do have patents on a lot of the processes, but we try to create the transparency and tell people you can go create your own version of ticker. We're not going to stop you.
Yeah.
We want you to have that power, that knowledge. But I'll say one more thing here. We look at what we call the four M's of investing. You have the math part, which is it kind of encompasses a lot of things that Wall Street does, but as Warren Buffett teaches us, you have to go a step further and look beyond the mathematics. You have to look at the meaning, the moat, and the management as well. So the meaning is the business model. How does it make money? How many revenue streams does it have? The moat is how the business compares to other businesses, and then the management is that's a track record of your quarterback, the CEO.
Right.
Doing those last three can take a lot of time, and we use open AI built into Ticker that automates that down to seconds. It could take you hours, if not days. So that's like another layer of confidence to really determine is this
Yeah.
stock strong or not. So yeah, we do cut a lot of the time out of the equation. It took a long time to get there, but
Yeah.
we've arrived.
Super interesting. That's a part I didn't realize. That's a brilliant use, because I was going to ask, those last three M's, right? With the meaning, the moat, the management.
Yeah.
I was going to try to tie that back and see if, okay, because you transitioned from, at least what I was diving into, you transitioned from corporate roles, right? You were with GE, you were with
Yeah.
Kohler, and so and
Yeah.
you go this entrepreneurial route, and then you go into the
Hmm.
SaaS, which again, you guys, if you're not familiar with SaaS, service as a or a software
Software as a
as a
server.
service,
Yeah.
that he said earlier, and you think about the CRM. Some of you guys that have campuses, the CRM you use Go High Level. That's a now
Yeah. That's a
Zoom.
good example.
We're all on Zoom right now. Zoom, I mean, technically really is a SaaS
Hmm.
business, right? So I was
Correct.
wondering if you were using that to help gauge those three, but you guys started integrating that open AI model.
Hmm.
I mean, that's
It's a
got to be,
time saver.
yeah, I was going to say, that's got to be a massive
Yeah.
time saver, massive game changer. Um, Was that something that was easy to implement on, and I don't mean easy, I mean easy to get your team on board with wanting to implement is a better question.
Oh, they were they were chomping at the bit to do something with AI, but my
Yeah.
thing was, and you guys probably see this, there's so many people like slapping AI in their business, like powered by AI or we use AI, which is
Oh,
it reminds me of the early 2000s or late 90s, early 2000s when people were literally slapping .com in their business
yeah.
and then people were piling into the stock when it was complete garbage.
Yep.
And I'm like, we're seeing the same thing here. So I asked my team, I'm like, we have to actually do something here that either definitively makes our customers more money or saves them a lot of time.
Yeah.
Um, Anything in between or anything that falls short of that, we cannot advertise as powered by AI. It has to actually solve a problem. So yeah, we decided if we can do both, let's do it. So yeah, it
Love
took about 6 months of prompt engineering to get that
Yeah.
tool right. I mean, the testing and the edge cases, it was ridiculous. But after we got it dialed in, it's like, all right, now let's go prime time.
Power solid. Oh, it's so cool, man. Okay. One of the other things I wrote down that you said, you're about investing and not trading. And so
Yeah,
so if you've got lay people here, and let's assume there's some gentlemen on the call that aren't that smart, that have a nice tan jacket, and a gray beard, and they're not that intelligent. And so they want to talk about they want to talk about the difference between trading and investing and getting a little more into the weeds on how you look at that. Is that something that somebody can graduate from being, a trader to an investor? What are, like, how are you distinguishing, and is there one path that seems to be more sustainable than the other? Like, how do you distinguish between those two
sure.
terms?
Yeah, there's a few differences there. And unfortunately, trading, it does attract a lot of people that they want to make a quick buck. They want to get rich overnight. And here's some of the facts. And we teach people in our onboarding, like if you join Ticker, which is free to join, you get a new tip every day. And like I think the first or second tip is the difference between investing and trading. And here they are. So trading, you are still trading your time for a paycheck. Like I've talked to a few guys that trade. If you want to make money at trading one option, and it's very hard to do, which is Forex, foreign exchange trading. And I've talked to guys that you're putting in 12 to 16-hour days. It is a job, but there's no guarantee you're going to make any money. So you're trading your time for a paycheck, which was my objective to not do that coming out of
Leaving in the
my
first.
right.
Totally.
Like, what are we
Yeah.
doing here? Whereas you flip that equation, you get money working for you with investing.
Got
So
it.
that's one big difference. Number two is 99%, this is a statistic, 99% of traders lose money. It's very hard to do. Whereas if you're doing it right with investing, I mean, you can move that closer to, like in my case, we can talk about this in a bit. I made the decision to not lose money in the stock market. That is a choice you get to make. It's a self-discipline technique
Mm.
with investing because you don't have to sell for a loss. You can wait for the market to lift the stocks back up and then sell for profit. That's called Rule One investing, which I mentioned in the book. That's
Book, yeah.
training from Warren Buffett. But I'm going to ask you a question here. This is a fun one.
Yeah.
There are a little over 3,000 billionaires in the world. How many of those do you think are traders, and how many do you think are investors?
Interesting. That's a good question. And I'm assuming 100% of those 3,000 fall into a category.
Correct?
Then, I mean, at least my,
You,
at
I mean,
least my,
you're pretty much there.
yeah, I mean, I'm gonna go with 100% on the investor side.
Yeah, yeah. So it's 0% traders
Yeah.
and it's 100% investors. And they
Yeah.
typically fall in the subcategories of stock investing, real estate investing, or entrepreneurs investing in
Got it.
themselves.
Got
Yeah,
it.
yeah.
Got it. So good. Okay, so from an investor standpoint, you're getting to help a lot of people. Maybe you've made a mistake yourself. Maybe somebody else, has come in. But what do you see new or even experienced investors mess up on that does make them lose money? Because you said you decided to not lose money, right?
Yeah,
That's the number
yeah.
one mistake you're seeing them make that causes them to lose money.
Yeah, that's emotions. P
Hmm.
Yeah, people get this and we all get it. People are keyboard warriors. They're an expert behind
Hmm.
the keyboard. They let their
Hmm.
emotions run wild. Well, you see the same thing in the stock market is the stock market will go down a little bit and they'll just sell for a loss. And one thing that thank Warren Buffett, Charlie Munger, and Phil Town for is that discipline to like first find good stocks and then
Yeah.
commit to them for the long term. Because get this, the two questions we get asked most are when do I buy
Uh,
and when do I sell? And
mm,
what happens is as soon as somebody buys a stock, they immediately ask, all right, when do I sell it? It's like, no, you're missing the point. You want to buy and then buy more. Buy more. That's where compound interest works for you.
right.
Because if you can leverage compound interest at 15, 20, 25%. In fact, we're working on a comparison chart. You can cut your timeline in half if you simply move to like 15 or 20% per year. If you're getting 10% in S&P and then you get 15 to 20%, it's like if you got a timeline to retire that's 15 years out, let's turn that into 7. No guarantees here, but
Yeah.
based on what our customers are getting, it's like you're just going to speed things up.
I love that, man. Okay, so how does the traffic light, on sale, what is it?
Hmm.
On sale, watch, overpriced, right?
Overpriced.
That's what I wrote down.
Yeah.
So on sale, watch, overpriced. How are you using that in your own portfolio, right? Like what are the signals out of those four M's? Like what are the signals you're finding yourself use the most
Sure.
to say I'm gonna act now versus I'm gonna wait.
Yeah, so we tell people that you want to buy when stocks are on sale and have a 4M of 80 or close to 80 or higher. So you could go with the just that summary we call it, which is that on sale watch overpriced,
Yep.
but the 4M is like another layer of confidence you put on top of it. Um, Now, selling, we tell people that's when your stock flips from on sale to watch or overpriced, and
Got
that
it.
4M drops to 59 or lower. That's when you've got essentially a sinking
Got it.
ship, time to bail. Otherwise, you're holding. And we actually teach people if you have on sale stocks, they got a high 4M, yet the stock is going down for no reason, and because the market's pulling everything down, that's what we call stockpiling opportunity, and that's how you make the most money. Because you want to attack at those points. Like for a great
Got it.
example is COVID. That
Yep.
pulled
Yep.
everything down 30%, yet nothing wrong with the businesses. And
Hmm.
that year alone, I had my best returns that year. I was at 120 that year. I won't
Wow.
I won't get 120 every year because there's not going to be a pullback every year. But 22 was a recession. I made over 100% that year because you want to pull everything down, attack, and then it's going to. What happens is
Hmm.
when you buy really good businesses and the market pulls everything down, as soon as the market starts coming out and those businesses have strong earnings reports, that's when Wall Street is like, oh, we oversold this
Yep.
business. We got to pile back in. So that's what causes those share prices to rocket. But if you are using ticker, you're on board. You're already in it.
No.
You want to just ride that rocket out.
Okay, cool. Because that answered my next, that somewhat answers the next question that I had was
Mhm.
how does somebody approach like diversification
Mm,
versus
there's a word.
diversification versus like
Um,
concentration of investments, right? Like, so I'm sitting here going in my Socratic brain going, okay, do you go a lot of stocks very lightly, or are you more likely to win fewer stocks very deeply? But
okay.
I don't think it's that simple, and the Socratics are never. It's supposed to frame things simply that definitely are not. But if you had to pick, like, how do you look at that?
Yeah. So we one of our first onboarding emails is the difference between wealth building and wealth protection. Now, I'm going to ask you another question. Warren Buffett, how he made his first million, take a guess. How many stocks did he hold in his portfolio to make his first million?
Good question. That's something I don't have any frame of reference for to make his first million. I'm going to, because I think the common answer would be like, oh, pick a high number. I'm gonna say one or two.
Okay, you're a little lower, but it
Okay, but
was,
it's low.
yep, yeah, it is low. It's 10.
Okay,
So
low.
what,
Got it.
and now Berkshire Hathaway's company today has 40. So what
Got
that
it.
teaches us, like
Got it.
even, right, Charlie Munger,
Yeah.
Ben Graham, who is Warren Buffett's mentor, The rule is you want to be about 10 to 15 stocks if you are still working and if you have a timeline to retire that's 5 years out or more. 10 to 15 stocks, that's it.
Got
Now,
it.
if you are at retirement or close to like 5 years or less, then you want to go like 15 to 30 stocks. The issue is, and I even see a lot of financial advisors, and we do have advisors using Ticker, they're
Mm,
all in wealth building mode. There's too many people in their 20s,
mm,
30s, and 40s that are
mm.
diversifying. And I'm going to leave a quote with you, and this one can be a little offensive to people, but this is from Warren Buffett. Diversification is an insurance policy for the ignorant. Let that sink in.
God, I like that. I've
Yeah.
never heard that.
Yeah. So too many people are diversifying when you want to be focused. Like if you're an entrepreneur, are you going to build 10 businesses at the same time?
Right,
Or are you going to build one business,
right,
right?
right,
And it's the same thing. And
right.
it drives me nuts. All these financial advisors, we're going to put you in four ETFs, and each ETF has between 50 and 500 stocks. Like the analogy I use is let's say you show up at we use a lot of dumb analogies at Ticker, but it is what it is.
This is well, then maybe because I relate to those and I use those all the time, so I like it.
You show up at the Indy 500 with a 1995 Dodge Neon, the fastest you're going to go is 100 miles an hour, whereas everybody else is going 230.
Yep,
Like you got
yep,
the wrong tool for the job. It's too
yep,
slow. So
yep.
again, 10 to 15 stocks. And then as you near financial independence or retirement, then diversify. But yeah.
Yeah.
And what's nice is financial advisors are that are using Ticker, they're getting it. They're paring down their customers' portfolios to get more focus because they're going to get the bigger returns.
Mm.
And then as they get older, then diversify.
Mm. Yeah, no, it makes a lot of sense. And the analogies make a lot of sense too. I mean, like you said, from
Yeah.
an entrepreneurial standpoint, right? Building one business versus trying to build a ton. It just makes a whole lot of
Yeah.
sense. For a relationship standpoint, right? I'm glad I've got one wife and once like I'm all set right there.
Could you
I'll pour into
imagine?
that one, right? I think we've been together 20 years, probably because I'm not seeking to diversify.
Yes.
That's a solid
That's
a solid plan of attack there, man. So
wise man. You're a
yeah,
wise man.
right. Uh, so no, the analogies are great. So I one interview that I heard you on, you were stressing confidence rather
Yeah.
than just knowledge, which is another thing that I had a visceral kind of like a yes kind of reaction to.
Okay.
Right. And
Yeah.
but what do you mean by that? What are some of the steps
Sure.
that you try to help your folks go through to implement that?
Yeah, so this was like an aha moment while building Ticker is when my motivation for Ticker was to get bigger returns and really accelerate my wealth building process. So I build Ticker, get it out there and realize that's actually not what the majority of people are looking for. And I'm hearing a lot of questions, a lot of comments like people really want more than anything. And you hit on the word, which is confidence. They want the ability to know what stocks to look for, what to avoid is another analogy here. It's literally the rest your head on your pillow at night and
Mm,
sleep better than you ever had before feeling. Like
mm,
that's what people want. And then icing on the cake is getting better returns in the S&P 500. So, and that was about a year and a half into building Ticker. So we didn't shift directions because Ticker is still highly focused on getting people good returns, but we peppered in a lot of content and we look at Duolingo has done a great job with
yeah,
education, right? Like if you want to learn a
yeah,
language, I guess no other tool better.
yeah.
Um, so we got to do what they're doing, but with financial education. So in the mobile app, we've got those micro learning modules built in that are inspired by Duolingo to get people from 0 to 60 as fast as possible. Like to go
Mm,
from, as we phrase it, beginner to confident investor. And we state 14 days or less. It's not a promise or a guarantee, but we do tell people, and there's people they'll go 0 to 60 in like,
yeah.
5 minutes. They can get up to
Yeah,
speed.
Mach speed.
Right. Right. Like, so that's our focus. And that literally, when people can do that, they know what to look for. They hear something on a podcast, read something on Reddit, they'll be on X, they'll be on YouTube, and everybody's talking about some stock and especially penny stocks. And they're
Mhm.
like, all right, let's fact check this in Ticker and determine if it's actually something we want to invest in or not. So it's kind of what's nice is to become the source, that confident source of truth.
How cool. Yeah, absolutely, which is the mission. Um, how do you guys, we've got, I'm thinking very selfishly from the men and gentlemen, you guys, we'll have Mr. Tepper with us here for potentially another 30 minutes or so. So
Okay.
questions that are specific to you guys, start putting your hands up at any time. I can bring you guys in, but we've got some, amazing men on the call, their fathers, their husbands, their
That's great.
business owners, their leaders in their community. And so along with that comes, the expectation to provide, to protect, to
Mhm.
preserve, family's future. Um, how do you help people? Maybe Ticker has this built in, maybe it's not, maybe it's more the leadership there and your team.
Mhm.
How do you help these guys approach investing without being paralyzed by, like all the what ifs that are around such
Yeah.
that are around a topic like this?
It's really our onboarding. We do tell people it's when you join, it's not about getting rich overnight. It is really about becoming educated.
Mm,
Another metaphor for you here is it's investing your first $1,000 or less.
mm,
Because I remember those days, and I'll use this in other videos, which is that moment you're jumping into the deep end of a swimming pool, like when I was a little kid. It's like, all right, is this the day I go? This is the day I go. I'm going to drown here. You jump in, you realize, you know what? I can do this.
yeah,
And it's the same thing with stock investing. You're going to buy your first stock or two and realize, all right, I'm onto something here, and that's the objective is kind of a slow
yeah,
ramp up, get yourself up to speed, and then start working your towards. We tell people you want to try to invest between 15 and 30% of your monthly income. And if you can't get there, that's okay. Start small, but that's
mm,
kind of a sweet spot where compound interest is going to do incredible things. But
that's
again, you're not going to get there on day one. You want to ramp into it with the education and it's laser focused. Like I tell you what, we take a lot of content and really compress it, the necessities you need to know to move forward. As I got books over here on investing that are
mm,
like close to 600 pages, and it's like 99% garbage.
yeah,
It's just
yeah.
it's all these $20 words and acronyms that what are we doing here?
Yeah.
This is unnecessary.
Yeah, we're playing pretend. No, that's really good, man, and I appreciate that, and I really think that's the truth around so much. It's those little steps.
Mhm.
I was proud of my son. I'm very proud
Mhm.
of all three of my kids, and I was proud of my son last night because I heard him talking to another kid as they were getting ready to go into their Ninja Warrior course or whatever. And kid says, "All right,
Nice.
we're gonna try to get the cannonballs." Today he says, "Aren't you going to try to get the cannonballs? Because we've had trouble reaching that because they're both on the shorter side."
Mhm.
And my son said, "Well, last time I got two of them." He goes, "Today I just want to get three." He goes, I'm not, I just want to put the next step in there. So how many,
Realistic.
right?" And he's like, "How many did you get last time?" And the kid's like, "I got one." He's like, "Just try to get two. Let's see if we can get two. Let's see if you can get two. Let's see if I can get three." Right. And sometimes
It's
it's that.
little
It's just go,
steps.
"Cool, man. I want the whole thing." And I'm realistic to go, what's the next thing? Let's make sure I get the next thing. Because the next thing will ultimately lead to the big thing. If I just go and get myself discouraged, like, let's just get the next thing. So,
That's for how old they are. I'm guessing like, 15 or younger.
and my son's 9. Yeah. So he threw it out there at 9.
Okay.
So it was just like, all right, man, go get it. Go get it.
That's like lifelong training. There's too many people set like these massive goals and it's just they're going from here to there. And then
Right.
if they don't hit it, they're disappointed and discouraged.
Disappointed and stop. Right. It's that
Right. It's
taking
the
those steps.
little steps. I know there's books that talk about that, small habits or tiny habits or whatever, but
Sure.
those little steps, that's what you want to you chip away at little things, right?
Man, oh man, so good. So, a little bit of a shift along those lines. I've also heard you talk about how biblical principles are baked in
Yeah.
how you
Yeah.
operate, Ticker. So how does that influence your decisions, especially around risk, profits, treating customers, all of those things? Like how have the biblical principles been woven in there?
Yeah, I give my parents credit for that
Yeah.
because it's you right integrity, do the right thing when nobody's looking. And
Mm,
there's been ways there's opportunities we had to cut corners to make money. For example, like penny stock. companies as well as crypto companies that I've never even heard of that wanted to pay us to advertise on Ticker. And I'm like, I
Yeah.
can't ethically promote your garbage asset to my audience because they're going to lose money off it, you
Yep.
know?
Yep.
And then the teach one of my favorite stories is in Book of Matthew of the three individuals,
Yeah.
the person with one bag of gold,
Yeah.
three bags and five bags, and the guy who saved it, it was just the weight there was like you unethical or pretty much God telling this person that you're
Yeah.
unintelligent, you can't manage money correctly because you're putting it in a savings account, essentially something that earns no interest. You might as well give it to the bankers.
Right.
Whereas the others who were able to double their money, they're the ones that were rewarded. So it teaches us that too many people that are playing this fear game of keeping money in savings accounts or
Yeah.
like diversifying, when you're 20s, 30s, and 40s,
Yeah.
what are
Yeah.
we doing here? So we really back that up, like, let's get your money to seriously grow. So yeah, a lot of people don't know that. You're paying attention.
I love
I
it.
pepper in a lot of biblical principles, and there's people that they don't know.
Yeah. Oh, yeah, it's parable of the talents right there. I mean, that's exactly what
Yes.
that is, man.
Yes.
I love that. And we talk about that often, within here, this group, this illusion of security and the illusion of
Hmm.
safety. Sometimes we'll go, okay, well, the safe bet is to
Hmm.
just do nothing. And
Ooh.
that is almost
Uh-uh.
while
Uh-uh.
we can't ever guarantee security like that's not a guarantee. I can almost guarantee that it's not going to come when you do nothing, in any regard. So
Yeah.
I love that you've incorporated that.
One one certainty, one security, and that's, I remember a pastor a few years ago said, trust the source,
Yeah.
not the resource.
Yo. Yep.
Yeah.
Bingo.
Just
Nailed it.
all eyes on him and like, all right, if I'm following you, I'm in complete chaos, things aren't working out. I'm going to keep my eyes on you, God. And there's, yeah, building ticker. Gosh, we hit those moments. It's like, all
Yeah.
right,
Yeah.
is this
100%.
thing gonna hang on? Am I gonna? And I'm like, one of my favorite, I'll stop here in a second, but
Are
one
you
of my
good?
favorite verses is Galatians 6:9. Let us not become weary in doing good, because at the right time you will reap a harvest if you don't give up. So if you're providing value, and there are people that are verbally saying thank you, or like you're seeing people that are getting results, but you've got no fruit out of it, not yet, keep
Mhm.
doing it. It teaches us biblical principle of not quitting. Whereas in the tech world, I've seen too many people who started businesses like Ticker at the same time. They are now all out of business, but they're not
Yep.
running their businesses
Yep.
based on biblical principles. They're
So
quitting.
good, man.
Yeah.
So good. And I'm gonna get Jay Z. I see your hand, so I'm gonna grab you. And I'm so glad you have your hand up because that's the Australian stud I was talking about. So we get to hear the
Nice.
accent, and that's really all I ever want out of
Yeah.
the calls. Is
Yeah.
just get that. Um, but you mentioned crypto. What
Hmm.
are general, we've got a number of men with various backgrounds that are on here live with us. Our audience is definitely all over the board on that. Some that are like, I don't understand it. Some that are like, that's where everything
Sure.
needs to go. And you've got everything in between. How do you guys view that with Ticker?
Yeah, so we kind of look at it like some of the large financial institutions like Merrill Lynch
Mm,
and other big RIA firms, essentially wealth management firms that are pretty much giving the advice you want to go about 5% or less of your net worth. So
mm,
we back that up. We do have crypto and ticker. However, you cannot calculate where crypto is going because there's no income statement, cash
mm,
flow statement, or balance sheet. Yes, there is volatility, and there's people like, well, I think it's going here. With ticker, we have high probabilities of where it's going because of the financial statements. Well, crypto is not a business, it's a digital asset.
right.
So we tell if you're going to go into it, fine, you can track it all in ticker because people like to keep it in one clean location. But if you're going to go into it, maybe go into the blue chip coins. Don't worry about these like,
Yep.
penny
Yep.
stock-esque crypto. They're probably not going to go anywhere. So
Got it.
I will be transparent. I do
Yep.
hold Ethereum, and this
Right.
would be a podcast for another day, but there's proof of work algorithm versus proof of stake. Proof of work is highly inefficient. That's what Bitcoin is on, whereas proof of stake is 99% more efficient. So it can scale a lot faster. I'll say one
Mm,
more thing here. Bitcoin today requires more energy than the entire country of Finland to operate per year. Energy costs is ridiculous.
Interesting.
Yeah, whereas Ethereum is significantly more scalable. And this, I'll say that because this is my favorite
Interesting.
topic, which is end of days type stuff, which I believe will be powered by a proof of stake algorithm because it can scale to the entire planet, whereas proof of work is just it's like the fiat currencies essentially,
Got
not
it.
as slow, but the
Got it.
UN for 30 years now has been talking about we need a single world currency.
Yes.
Nothing had the tech stack capabilities to scale to a global level until 2013, 14 when Ethereum came out with proof of stake. Again,
Got it.
this is a whole nother
Got it.
topic,
No,
but
man, but you've got an audience here that I think
yeah,
will at least understand the mindset of what you're talking about and where you're coming from on that.
yeah,
I think you're in like-minded company in a lot of ways. So very cool, man. All right,
sure.
Jay-Z, let's get you in here, sir.
Morning, gentlemen. Thank you,
There we
Mr.
go.
Tepper, for being
Sure,
here.
John.
My question was about you were mentioning the four M's. When you're looking at the management specifically, what exactly are you looking for? Are you looking for people that you think are going to do well in business, or is it a more moral thing that you're looking at that align with your values?
Yeah, with management, we actually keep it a little more high level. We look at the impact they had on the business, and we actually have within our prompts, like, were there new revenue streams they released? Like a good example, Satya Nadella helping introduce Azure, their hosting platform. So new revenue streams to the business. And then we look at the mathematical side. I'll give you three ratios here. There's return on invested capital, return on assets, and return on equity are you could call it a quantitative way to look at leadership's ability to apply capital to a business. But what you're getting into is you raise a good point about the ethics, and if a CEO is aligned, we don't go to that level. Maybe a biblical lens could be applied to this at some point, but we aren't doing that right now. It's really what have you done in the past? And if you've done that over and over the last 4 or 5 years, which that's the window we look at, there's a high probability of continuing that leadership track record into the next year or two at least. Does that make
Mm.
sense?
Yeah, very much so. Has there ever been an instance where you've felt compelled to invest in a company, but something has been steering you in a different direction because it was pulling at your moral compass, and then you pulled out of a trade despite your
Mm.
analytical lens telling you otherwise?
Mm.
On a personal side, I have actually, and I'll call it out. Like Tesla, for example, Elon, some people really they can idle him, and I don't admire his leadership style, the whole working 7 days a week as much as possible. That ticker, for example, we worked 4 days a week. We're all about work-life balance, spend time with family because you might not be around. So yeah, if I find a leader that is all about that hustle, we know what that is, right? I'm like, I can't align with that. So I think Tesla's got some legs into the future potentially, but leadership, I can't get behind it. And then this is a whole nother topic, but competition is getting pretty steep. So there's that.
Mm. Hmm.
Yeah.
True story.
Mhm.
Good question, Jay-Z.
So, so based off of that, it feels like it's very multi-layered how deep you would take it on a personal level in comparison to the way that you would teach someone in an educational sense.
We kind of get them to like the 1 yard line, if you will, and using American football here, which we give them all the tools to really bring them there. And if they want to buy based on the summary and that 4M score of 80 or higher, there's a high probability you're going to make money. But yeah, you kind of have to if you want to, make a decision, a game time call at the 1 yard line, be like, you know what? I don't like what this business is doing. I'm not 100% aligned with what they're doing. I'm not aligned with the CEO. I'm going to look for something else. That's on you. Unfortunately, there's about 75,000 stocks, publicly traded companies. So there's a lot to choose from.
Mm.
Mm.
That's wild. So 75,000. This is, and not to derail you, Jay-Z, at all, but this is just 75,000. And you got Berkshire Hathaway rocking 40. So
Right.
interesting.
Right. And they're a mix of public and private. The private businesses are Fruit of the Loom, Dairy Queen. I like those blizzards.
Yeah,
And
man.
then
Yeah.
right, sign me
Yeah.
up. But you know what? That's good questions, John, though. It's
Mm.
there, I know financial advisors that are extremely strict with biblical investing, and I mean, they are getting all these businesses out of the equation. I was talking to one guy, he was like, I was like, you could literally find a reason not to invest in almost every business on the market. And he's like,
100% you could.
you're 100% right. I would literally run into a situation where I'd put my money in no stocks.
Yep.
And what are your options then? There's
Yep.
not a lot of bonds. They
Yep.
don't keep up with the market.
Right.
You go into a CD or a savings account that goes back to the biblical rule, like you're just putting your money into
Sit
the
there.
ground, right? So what do you do? So you gotta, it's tough. It's a tough call sometimes.
That's good stuff. Anything else, Jay-Z? I know I jumped right in front of you, Jay-Z. I didn't mean to do that, but
Nah, it's all good. Thanks for letting me ask the question. It's this is the time of the morning when my brain's firing. So
yeah, yeah, good.
Yeah.
That's right. Yeah, it is for
thank
you.
you, Mr. Tepper.
Yeah. Good to meet you, John.
That's so good, man. This is a selfish. So Jay-Z's one of our leaders in the education space and launching a
Mhm.
campus out there in Australia. So this is a selfish question
Mhm.
on my side and our side as an organization. But how do you view or what would you like to see from a financial literacy standpoint in the education system? And again, selfish question,
Holy
um,
smokes.
because that's it's something near and dear to our hearts as we launch campuses around,
Yeah.
building these. It's really a full family approach, and we want strong families. We got a lot of dads that are on here, and anytime I mention this, I was in the public sector and private sector, and anytime I mention this, I inevitably do make some current public school teachers angry. Well, no, this was taught. You just weren't paying attention. And I'm okay,
Mm,
maybe,
I know where you're going.
maybe, but so
Yeah.
how would you like to see that in terms of educating the public on things like this?
It's, I tell you what, one of the fastest growing demographics in Ticker is that like 18 to 20
Very
year
cool.
old range. Yeah. And these kids are joining and they're like, I had no idea how compound interest worked. I didn't even know the term.
Mm.
And I joke with people in this community, the Ticker community, and I'm like, my gosh, if I could hop in that DeLorean and go back to
Yeah.
when I was in middle school or high school and just take every birthday, every little bit of money I had or Christmas and put it into a select group of stocks where I'd be today. And so
Totally.
we've got parents that are doing exactly that. And to give you the mechanics here, any fathers on the call here, set your kid up with a custodial account. So, for example, I'm at Schwab, a custodial account, you're sharing the account with the child, but then they inherit it at age 18. But that way you can monitor the behavior and say, hey, you got some money here from a birthday or whatever holiday.
Mm.
Let's put it in and put that money to work. And the simple calculations are there, and Ticker has downloads, so teachers could literally take the Excel sheets and show kids like, let's say you've got $1,000 and it turns you 15%, so it's, 1,150. All right,
Mm.
then it's 15% against the new number, not the old number. It's the right,
Right.
and it keeps
Right.
compounding. It's a fun equation to play with, but you can visually see, like, for example, we're going to be starting what we call the $100 a week club. If you can put $100 in the stock market, and get this, if you start with $1,000 and you put $100 in a week, I think it's in about 17 years, that's $1 million.
Interesting. That's
Yeah.
not, I mean, again, that's not that,
That's not that long,
not that
right?
long.
Yeah. So there's people like $100 a week, 400 a month.
Oh,
I can I can do this. I
yeah.
can do this. It puts them
Yeah.
in the right frame of mind. I had
Yeah.
all the credit goes to one of my friends and customers. I did not come up with this idea. He was like,
Yeah.
you should do this. And I'm like, you are a
Oh,
genius, sir.
I like that. So, I mean, you've got that's brilliant, and you've got obviously a good tribe around you too. So,
Yeah.
one of the things that we always, well, some of the things we look for as we're growing in any areas, we love looking at um, having the right people around us. So the
Mhm.
friends that we have around us, the tribe we have around us, right? the people that we have who have gone before us and mentors and getting to speak every week with amazing humans like yourself and coming in who provide so much value there. Books, platforms that have like there's all of those things. So for you, who do you look to and go, okay, man, this has been, a mentor for me or somebody that has really
Sure.
shaped who I am. And maybe this is a book or two. And I know you mentioned Rule One in there as
Built town.
as
Yeah.
those books. Who are those people, books, resources? Who do you that maybe helped you before, or maybe that you look to now?
Sure.
It's like, man, I love watching this guy now, like mentor wise, book wise.
Uh, Brilliant question. So I've never been one of those guys that I reference this whole idol concept. People pick a person, they will
Yeah,
idolize them. Like Elon can be
right.
that for people. But I like to hear, I won't always listen to everything they have to say, but I'll kind of pick and choose. Like, okay, so
For
that's
sure.
logical, right? Right. Like
For
that
sure.
makes sense. That doesn't. So Phil Town, yes, he's just a down-to-earth guy.
Yeah.
His book, Rule One, another one is Payback Time, and then his third book he wrote with his daughter Danielle, which is Invested. And I never read that one, but I'm sure
Okay.
sure it's also good. So him on the investment side was really the inspiration for Ticker because he helped cross the bridge on the mathematics. He's the only guy that provided the calculus in the books. I'm like, all right, thank you, sir. Reading books, Dan Ariely. I think has a
Yeah.
strong sense of psychology and
Yep.
pricing and behavior. He's one of my favorite authors, and he in his writing he feels just like a regular, approachable
Yep.
guy.
Yep.
I do like a lot of the teachings from Alex Hormozy. I just read 100 Million Money Models. I read the
Yeah.
other two books too, but you guys know, and I don't want to, if Alex were to ever see this, you probably wouldn't, but he is all about that hustle, working and working and working 7 days a week. Don't go on vacation.
Yep.
Um, I don't support that. Again, spend time with your family, enjoy
Totally.
life, right? Right.
Totally.
So
And
Alex is good.
totally.
Trying to think. And then Jeff Walker. He is, if you guys ever follow him, he's good on like sales funnels. He's done some work with like Russell Brunson, but
Got it.
Jeff, I think, is a little more down to earth and approachable. But he is a really good copywriter. He's
Walker.
really good.
Okay, Jeff, I'll have to check him out. That's
Jeff
one, yeah,
Walker.
that is one I don't know. Dan's books, yeah, I agree. Have been have
Yeah.
been phenomenal, and he breaks down some a mark of a good book a lot of times to me is when somebody is able to say something in simple language and you go,
Bingo.
you go, oh yeah. Like I kind of knew that, but I didn't really have the words to articulate it or really wasn't even able to isolate the idea until you
Yeah.
put it that simply, right? And that's Dan's books, I think, have done that for me. And yeah, 100% agree on Alex. And we know Alex has come in with us too. And I'm going to go see Alex
Hmm.
next. I think I'm going to go see him next week or the week after.
No
Uh,
kidding. Okay.
no, and so I know,
I
but
retract my statements then. No, I'm just
not at all. You not. I agree. And he and I have had this very conversation. And to his credit, he's like, of course that looks different. And he's like, right now you've got kids, you've got a family. He's like, this is
yeah.
what Layla and I do. This is all we want to do.
Yeah.
Like, I don't
Yeah.
think everybody should do this. This is what we want to do. He's like,
I
people,
appreciate that.
I
Okay.
appreciate that so much too, right? Where he's
Yep.
like, of course you want to build the best business you can, and you've got your wife and three kids. He's like, Alex, he's like, me and Layla, this is our kid. Like, this is it.
Okay.
He's like, so we want to do this 7 days a week. Nobody should do this if that's not what they. So I appreciate that he makes that distinction.
He admitted that. Okay. All right.
100%. Yep.
Love it.
So got to give credit where credit's due.
Yeah.
So yeah, right there with you. So 5, 10 years, if you've got your druthers, you get to pick, 5, 10 years and Ticker is doing what, right? And I mean that in terms of like, how are you viewing the business in terms of like product features? And then
Yeah.
how are you viewing it in terms of impact on everyday culture and everyday life?
Oh man, you ask some really, really good questions. So that's something I had to like put my mind set into a position where do I want this business to go? And one thing, yeah, I'm really studying scripture is God doesn't want you to just create something that just sustains or just survives. Like if you're going to be in it, create something that creates kingdom impact. So as long as I'm building Ticker, what I been praying to God is I'm going to turn this into a tithing machine. So I do tithe gross profit,
Mhm.
10% back into the ministries that I really follow because they can spread the word to more people. And I funnel that. I am sticking to that. So that is the direction I'm going. And unfortunately, Ticker being a SaaS business is very scalable
Yeah.
and it's more B2C focused. However, we do sell primarily B to B2C, which means through distributors or channel
Yep.
partners. And thank God the doors are opening now. The biggest channel partners out there are brokers because they've got all the retail investors in one location. Well, we just signed a few in the last month, and I'm like, I've been pounding on doors for 5 years. In 1 month, you just open those. I'm like, that is not me.
Yeah.
That is all God. But I see Ticker going that direction now. There's a question I'm wrestling with in my head is if one of the brokers were to buy us out,
Yeah.
then the logical path is venture capital to help build other businesses. But until then, it's like tithing machine, let's take this thing to the next stratosphere. So that's kind of where my
I love it.
mindset is at.
Yeah. How cool, man. How cool. Um, there's, talking about compound interest and there's kingdom interest in there too. And I love the way you're weaving that in and making that and making that a priority, man. So it speaks to the
Yeah.
character, 100%. And I would be remiss if I didn't talk about and we'll just go outside of the financial altogether. Similar questions, 5 to 10 years for Sean. 5 to 10 years.
Where am I going to be?
Yeah, where are you? Where are you? Where is the family? What are you doing? What does that look like to you? Because I just again, you're speaking,
Yeah.
again, we're just getting to know each other today. I've done a little
Sure.
research and we're just getting to know each other today, but I'm like, man, okay, this is a guy who speaks our language, I think, as an organization and just has a very similar mindset to a lot of us, and I think to a lot of our listeners and things too. So yeah, again, you got your druthers, 5 to 10 years. What's that look like for Sean Tepper?
To be honest with you, I am fortunate. I get to do what I want. Building this business and my team, I tell my team I want you taken off on Fridays. I try to do the warmer months. I do play golf on Fridays. I'm not going
Yeah,
pro anytime soon,
yeah.
and my wife and I love hiking. We love kayaking. I do a lot more mountain biking. I get to do all that now, and I want to make sure I keep myself. I'm eating right, and I'm taking. And I've been an athlete from a young age, and God willing, my health stays. I'm going to continue doing the same things. I'm not going to change my lifestyle a whole lot. Probably
Mhm.
still live in the same home I'm at in Pewaukee is the town I'm in.
Yeah, yeah,
So to be honest with you, no major life changes. I know like the concept of retirement, some people want to ride there. It's not actually I'm in a men's group and it's not actually a biblical principle. And I
yeah.
see people who are entrepreneurs and even doctors that are well into their 70s and early 80s, they're still working because it keeps them sharp. I'm like,
Right.
well, I want to be that guy. So I'm
That's
going to
right.
continue
Oh, that's
building
right.
building business as well into I'm in my younger 40s now. Like I want to try to do this next 40 years plus,
Right.
ideally, again, God willing. So be honest, yeah, go 5 times.
Cool.
Probably not a lot of changes. Maybe travel a little
Yeah.
more with my wife.
Yeah. Yeah.
Yeah.
I relate to that so much, and I'm smiling, man, because it's funny. We had this very conversation around the dinner table this last weekend, and God bless, I got the best mom on the planet. She's fantastic, and started having this conversation. Just
Mhm.
around the way the world was going and just some, but nothing crazy. And she's like, yeah, she's like, I was talking to, all the people here in the community and some of them love Biden and some of them love Nixon and some of them, and I went, you mean, wait, you said Nixon? She's like, no, no, no. She's like, I'm talking about President Nixon. And I went, uh-huh. He was president in like 60s and 70s, right? She's
Yeah.
like, no, Nixon. And I'm like, Mom, do you hear what you're saying, right? And God bless her. And I think she's like, what am I saying? She's like, I'm talking about Trump. And I'm like, hey man, do you think maybe because now you're retired, you're starting to lose, like, do you need to get more job? You're very active. Like, do you
Yeah.
get, and again, God bless her. She took it very well. She's like, geez, she's like, all right, I've tried to take on all these roles. She's like, but I gotta be honest, maybe I even need to do more because I want to stay sharp. So we started having that conversation, and I'm with you. Like, retirement that sounds horrendous
Yeah.
to me.
Yeah.
That sounds awful. Like it sounds horrible. That sounds terrifying to me. So I'm with you. I think we're called to continue to work and, just move,
Yes,
help build and serve. I think that's the design. And I think we get the most out of it when we lean into that.
totally. You gotta, and this took me years to
Yeah.
find something you really love to do because fortunately, I worked for some great companies, but I've had some managers along the way that
Yeah.
were, whoa,
Yeah.
they were brutal,
Yes,
made my
sir.
life a living hell.
Yes, sir. Understood.
Right?
Oh, well, man, I want to be able to continue the conversation with you. John, Jay-Z says, "Look, you come to Australia, I'll cook you a Vegemite sandwich." That sounds like one of the worst offers anybody's ever given on this program. But God bless you for giving that, Jay-Z. I love you. So I'm going to take these guys through a debrief. I know you're jumping to another meeting.
Mhm.
I'll take these guys through a debrief here
Sure.
for the next half hour or so. I want to make sure as this goes out to all the listeners here that we do right by you on where people can go to find you, where they go
Sure.
to find Ticker, how we get all that going, and then I'm gonna reach out to you. If not later tonight, then tomorrow. And I got a couple things I want to send to you just as a
Sure.
thank you and be able to continue the conversation because again, speaking our language. So where do we find what you got going on there, sir?
Yeah, try to keep it easy. Two places. Go to ticker, TYKR.com if you want to check it out. And then LinkedIn. I'm very active on LinkedIn.
Thank
Yeah,
you.
so you can reach out there. Now, just a heads up, I mentioned travel. My wife and I are going to Croatia tomorrow. We'll
Nice.
be gone 2 weeks. So if anybody were to reach out, I know my responses might be a little delayed. Otherwise, I'm checking LinkedIn every day, Monday through Friday, pretty much.
Very cool. Very cool. Well, I will reach out in a couple of different areas, but you guys enjoy the trip. If you guys ever find your way out to the mountains of North Carolina and
Mm,
explore the Blue Ridge, you got a place to stay out here at Apogee HQ too. So
awesome.
again, I'm going to reach out and make sure we can keep the conversation rolling, make sure we can support. We love supporting good people doing good things, and I'm excited to get the word out here and again keep the conversation going. So thank you,
Well,
brother.
thank you for the opportunity, Matt, and I'd love to continue the conversation for sure.
Very much so. I will reach out. I'm gonna take these guys through. You guys have safe travels, and
Thank you. Thank
yep,
you.
and we'll connect soon.
All right. We'll see
Awesome.
ya
Thank you, brother. Take care.
later.